All right. Hello, everyone. Just as a reminder for those on Twitter Spaces, none of this is investment advice. We are just discussing our own opinions. There's a disclaimer on our YouTube channel with a disclaimer saying language such as that. So I just want to make sure we get that out there in the Twitter Spaces recording as well. So, hey, Matt, how's it going? Episode 71 here. And I think there's a lot going on. Today's election day. It's a big deal. It seems like their latest polling, which is hard to trust polling these days, but seems like there will be potentially. I mean, the Republicans will take over the House of Representatives. That's very likely, but the Senate is that the one that's like kind of up in the air? Is that the right? Am I right on that?
I think so. Although to be honest with you, I haven't been following it too closely. I'm normally on like Real Clear Politics and checking the odds like weeks beforehand. And this time, for whatever reason, I just have not been interested. It may be
Mm.
that I'm just not. Both parties seem to have failed, but I still did my part. Voted, turned in my ballots yesterday. Actually, voted absentee. So. Um,
Yeah.
but yeah, I think that is right. I think it's a high likelihood that the Republicans are going to take the House, but the Senate's more of a toss up. That was my
Yeah.
understanding.
Yeah. And I wonder if, it seems like a lot of people everyone's looking for excuses for the market to go up again, right? Everyone's looking for hopes and dreams of the market. The equities going back up, and Tesla in particular, and all that is part of the market, obviously. But there's a lot of stats, saying that after the election, the market outperforms, during after the elections happen for the year or something. So we'll see if that holds true here. I mean, past what's the saying? Past results do
Past
not predict future
performances, yeah.
performance. Yeah, yeah. And so I always try to think about that when people float out these stats. I mean, it's we talked about it on that podcast. I mean, Michael Wang on that interview with Prometheus, he brought up a good stat about that. So the last few weeks have been rough, as we've all seen, and especially if you're a Tesla investor, it's brutal.
Yeah. It's
So
it's interesting. I was just thinking about that interview we did with a bunch of different hedge fund managers, and I think it was a panel of 4 or 5 different fund managers, and they were just asking everybody, okay, like what do you think is likely to happen in the short term? And people had kind of mixed results on like what would happen in the long term, but
yeah.
unanimously, everybody thought in the short term, there'd be a bit of a pop, like a short rally. The exact opposite thing happened. So I did think that was kind
Yeah.
of interesting that
Yeah.
it was so
Well,
wrong.
I did track it. There was like a 2 or 3% pop, but then everything's gone down since then. Everyone was predicting like a 5 or 10% pop or something, like 20%. Or I don't know. Everyone thought there'd be like a more meaningful bear market rally. Yeah. Yeah. But there really wasn't. It just kind of went down mostly after
Yeah,
that.
but that stat that Michael pointed out, I think it was markets after a midterm election, like the 12 months following a midterm election. I think it was like in 30 of 30 cases or something like
Yeah.
that.
Something
The market,
ridiculous.
it was
Yeah.
like, yeah, as long as there has been a a market, essentially, it has been up on 100% of cases, which is just like kind of absurd to think about. So yeah,
Yeah.
that's not necessarily any indication that this will happen going forward. I think the market dynamics right now are incredibly unique. But that's
Yeah.
at the same time, that's why I think you and I have been talking about fundamentals a lot more, because
Hmm.
it's so hard to time macro. But if you're focusing on the company fundamentals, I think it's a lot more probable to have good outcomes and like outperformance if you really
Yeah.
understand a company in that way.
Yeah. So we should know the results, I would think, probably by, tomorrow or Thursday. I don't know. There's like delays in vote counting in some places that might delay results of, some heated races. But there's also the CPI on Thursday. And so do you think the CPI print is as important as previous ones? I feel like it's not as important. It's like out of vogue or something. It's just CPI, like, it's just, it's more about the Fed and what the Fed language is. And I mean, the CPI, you got to think is one of the indicators they look at, but I know they just have their own kind of terminal rate in mind, which they keep increasing. Um, well, what do you think about the
Yeah,
CPI this Thursday? Is it important?
it's interesting because the last, I don't know, 3-4 months or so, CPI has been like a very very big deal.
Yeah.
But every single time it's disappointed a bit. And so I
Yeah.
think there's kind of this expectation that okay, CPI really needs to turn around in order to kind of get this like super aggressive Fed off its course to get them to change their mind. So I think my kind of view of what people are thinking right now, and I could be wrong. It's just kind of my interpretation, but is that nobody is expecting like as drastic of a turnaround in the CPI number as it would take to turn the Fed's course around. So the Fed is. They went from being this data dependent Fed to no, we're raising rates no matter what and much
Yeah.
longer than you think. So I
Yeah.
think if it was a different backdrop of the Fed where they were saying we're going to really closely monitor the next couple of months of CPI print to inform our policy, then I think this would be a big deal. But
Yeah.
because they're so kind of stuck on this current course, I tend to agree with you that it's probably less important than the past couple of months have been.
Yeah, I agree. I mean, the Fed, I think the markets are unhappy with the Fed because of the language and basically the quote unquote terminal rate the Fed is aiming at, or the futures are predicting, is been increasing, and so it used to be like 4.5%. Now it's like between 5 and 6%. So it's like going up, and I feel like it's being priced into the market. We don't know where the Fed terminal rate is going to really end up at. Is it really going to end up at 4.5%, or really going to go up to 5.5 or 6%? I don't know. If I knew that the Fed terminal rate would get priced in at 5.5 or 6% 6 months ago when it was being priced at like 4%, we would have hedged, right? But you don't know that, right? Like you thought, okay, 4%, that's pretty aggressive. Now it's like terminal rate is like well above that. Now, do we think that the Fed terminal rate is going to like end up going up to 10%? If we think that, then we should really be buying a ton of puts, because 10% interest rates versus equities, I mean, it's pretty attractive to get out of equities and just put everything in T-bills for 10%
I
return.
know.
So you got to imagine the market's going to crash big time if the terminal rate continues to go up to like 10% plus. So I don't think it's going to happen, but if I knew it was going to happen, I'd be buying tons of puts, because I think the market hasn't priced that in, of course, but it's priced in this like, between 5 and 6% terminal rate, which it seems pretty high. Seems like it might not go that high, but do you think it's going to continue going up beyond that, Matt? Or do you think this terminal rate's going to be,
Yeah,
stop
I
around
mean,
5 or 6%?
it seems crazy that we're even talking about like 10%. And to be clear, like I don't think 10% is in the cards. I think that's
Yeah.
incredibly unlikely. But the one kind of consistent theme this year is that like all my expectations of where the terminal rate would be and how quickly inflation would turn around have been wrong. So
Yeah.
it's certainly worth eating a slice of humble pie and just saying, it's very hard to predict these things. Especially when the Fed's kind of looking at these lagging indicators, which like we talked about the PCE maybe a month or two ago and how slow that is to
Owner's
kind of
owner's equivalent rent. Yeah. All that
yeah. Oh,
stuff.
yeah. It wasn't PCE. It's owner equivalent OER, owner's equivalent
Yeah.
rent, which is
Yeah.
this piece of the CPI calculation, which is really lagging, which
Yeah.
stretches the inflation effects, kind of well past the point at which the changes have actually occurred in the economy. So, it's hard. Like I would be surprised if the rates end up like higher than 6%, but I've been surprised like this whole year. So I guess we'll just see.
Yeah.
I don't know.
I mean,
What's your thought? Like, if you had to put like, what's the odds of, like a 5.5 to 6% rate, and then like I don't know, an 8% and a 10%. Like, what does your distribution curve look like of all these different outcomes?
yeah. I mean, just totally out of thin air, finger in the wind, guess. I'm gonna say it's like it's priced accurately. 50% over under is like 5.5% as the terminal rate.
That
I
sounds
think
about right.
though,
Yeah.
that's probably what the market's pricing it at, something like that. So I think, and I'm probably just brainwashed by looking I'm trying to like imagine if I could look at it without looking at the market first. Like if you're looking at, like, I keep thinking to sports betting analogies, like when I used to bet on like football games or whatever a lot when I was younger. I try to like look at the matchup and try to place my own line before I looked at the Vegas odds, because the Vegas odds always influence whether I think so or not. They're always going to influence my judgment before, so I'm trying to think, all right, so 10% plus terminal rate, I would say, is like 10 to 20% chance, to be honest, just because that's pretty high. But I think they have this kind of crazy mantra to get inflation under control and these lagging indicators. And I think there's a chance that inflation really was a major shock more than what we saw. Like in reality, if they had like a truly accurate way to measure it, it really was like 15 to 20% for a year, not 8%, you know? And I think
Hmm.
just the way that the lagging indicators are set up, it's going to look like inflation's been like 8% for 2 years and is sticking around at 2%. 8% for 2 years in a row and just going, it's not going away. When in reality, it was a shock of like a 15 to
Hmm.
20% 1 year shock from supply disruption and COVID and all this stuff. And so I think that's going to screw up their judgment big time. They're going to think that
Yeah.
inflation is not going down and they're just going to keep pumping rates up. So I think there's like a 10 to 20% chance that happens. So that's what I'm
It
worried
seems like
about.
there's like a huge kind of like whiplash effect that's going to go through the economy, because like right now it's very clear, pretty much nationwide, that like home prices are like crashing like crazy, which is eliminating a lot of the wealth of the biggest single asset that most people own, is getting like its value totally destroyed, on top of like 401ks and personal savings. And we're seeing now that credit card debt is really spiking to just absurdly high levels. um,
Yeah.
so it's really clear that the economy is slowing down. But if these lagging indicators take, say, another 12 months to make their way through, and then 12 months from now we've got like, I could actually see a potential, if we don't change course in the next 12 months, you would have like a very significant period of deflation potentially, where these home price indexes, which make up
Yeah.
almost a third, I think it's actually a little over a third of the entire CPI index, could be like really drastically impacting inflation the other way. So then I think the Fed could be very forced to very abruptly cut rates, and but a lot of damage would be done in the meantime. So yeah,
Yeah.
it's so strange how we've got these handful of people who are dictating so much of the economic policy of our entire country, and but
Yeah.
they don't have a great track record of getting this stuff right. It's
No,
like the whole history of
no.
economics is like too high for too long, or too low for too long. There's
Yeah.
like not a good market rate, and there's got to be a
Yeah.
better way out there.
Yeah. And Kathy Wood did her in the know from Friday. It's always great. She does it, I think, once a month. I really respect her point of view, her perspective. I think she's more accurate, than the Fed is on where things are or what's going on. And she gives a lot of examples of like 1918, 1930, and the 1970s and 80s inflation stuff. And but I think one of the key things I take away from her is that how bizarre it is that all 12 Fed members have been unanimous. And so the Fed minutes that comes out in a couple of weeks from now, from the last meeting that happened last week, I'm going to be very curious if all 12 members were still unanimous on the 75 base. Like the reason you have 12 members is so that they have like discussions, and discussions
Yeah.
mean like different views to discuss. It's not like everyone just thinking the same, group think all the same. That's not really thinking. That's just like going with whatever. I feel like it's just very strange to me that they're all unanimously on the same page. 12 members, not like two or three or four, not even like the Supreme Court of 7 or 6 or whatever. It's like 12 members are all on the same page. That just seems odd to me for these
Yeah, the
historic
Supreme
rate
Court's an,
increases.
an interesting analogy. I hadn't really thought of that, but like, how often do you see, like a completely unanimous Supreme Court decision? That never happens. So like,
Yeah.
wouldn't you
Yeah.
expect something very similar on something as important as economic policy?
Yeah. Yeah. It just seems something's wrong with that.
Yeah.
It doesn't compute to me. So who knows? And what I also think could happen is they raise rates like this, like crazy, to fight inflation with these lagging indicators or their perceived inflation, and then eventually the lagging indicators start showing deflation. They have to push back and do QE again and print money and lower rates quickly. But then they can say, "Hey, we finally beat inflation. We finally beat it. Our process worked. We raised it to 8%, and it was enough to get it down. And we just can never let rates go below 3% again, because when rates go to zero or below too low, then crazy things happen, like cryptocurrencies take off and people get rich out of thin air of NFTs, and this thing called NFTs and cryptocurrencies and SPACs happen like crazy because rates are too low. So we can never let rates go below 3% again. And that's what we're going to do going forward or something." Like I could see that being the new kind of almost informal doctrine that the Fed follows for decades to come. So, but we'll never
Yeah.
know if the Fed, we'll never, there's no like alternate universe that we would see if the Fed decided to pause right now. and like do what like Elon said, just raise by 25 instead of 75 more recently or whatever, or just like, and I think if do what Kathy Wood says, just kind of start reducing rates or realize that there's deflation going on right now. That we'll never know how much better the economy could have been if they did that versus
Yeah.
in this course of raising rates. So it's too bad.
Yeah. Yeah, it really is. One thing I've been thinking about recently, though, is like a year ago, year and a half ago, even one of the kind of major themes that we were talking about is what an interesting time it is to be alive, just with how quickly AI is advancing and the economic potential that is probably going to unleash this decade. And monetary policy doesn't really impact that that dynamic at all. So,
Yeah.
Kathy said something to the effect on her in the know, and a lot of times I just discount what she says because she's been on the wrong side of this all year, just like I have, frankly.
Yeah.
But she was saying that this current downturn is probably going to look like a blip in the grand scheme of things. And if you truly
Mm.
do believe in the power of AI and like the Tesla bot to just be incredibly transformative, then I think that's true. So like I wore my "Don't Panic Today" shirt as a reminder to all the investors out there that the markets are certainly not in a good spot right now. Tesla, I'm shocked that it's under 200. I like
Yeah.
would put the odds at that at a very low percentage earlier this year. Um, but like the long term story is still so compelling, and I really do believe that this is an incredibly exciting time to be alive, and we could be redefining the economy as Elon's been talking about soon if you remove the labor constraint. So I don't know.
Yeah.
I'm very bullish in the long term, but it's a question of how long it's going to take to get there.
Yeah. And thank goodness this crazy interest rate change for growth stock valuations is happening now versus if it happened, 8 or 10 or 5 or 10 years ago when Tesla was still needing to raise
Yeah.
capital, to fund their growth and what they're doing. That would have been really hard as a Tesla investor. Like, I think for sure someone would have bought them, or they would, they had those early negotiations to sell to Apple, or they tried to, or, I don't know if they would have made it as an independent company like they have if valuations were getting compressed so much like they are now for growth companies. So thank goodness it's happening
Which
now, not back then.
Yeah, but I mean that makes it a lot harder for the companies that are not cash flow positive right now. I mean, like
Absolutely.
Rivian, for example, I feel like their hurdle rate just got a lot higher.
Oh yeah.
Although I
Yeah.
mean they've got backing with Amazon, which I think they're unlikely to actually
They'll
go out
hang
of
in there.
business because they're going to be able to raise capital. It just may be at dilutive terms. But there's a lot of other companies that probably would have made it under the old regime that just won't make it with valuations where they are today. So
Yeah.
yeah, it's interesting.
So, I mean, what do you think of Elon's really, I wouldn't, I'm not surprised. I didn't see Elon coming out and saying, I recommend voting Republican. Like that's pretty serious that he put that Twitter. I mean, it's upsetting for the stock. If you're a short-term holder, it's kind of upsetting because I think a lot of the drop the last couple days in Tesla relative to the market, especially,
Yeah.
I mean, a lot of the growth
It-
tech stocks have taken a hit yesterday, but Tesla abnormally so. And I think a lot of it just there's a lot of on the margins people selling, afraid that Elon's ruining his credibility and alienating half the population and boycott risk, all this stuff. So I think there's just kind of marginal selling on Tesla. So if you're a short term horizon guy, whether it's options or just whatever, trying to invest short term, it's very disappointing. But for long term Tesla stockholders, I don't think it moves the needle. It doesn't matter. It just gives a better entry point to potentially buy more. But I think short term, it's hurting the stock price. What do you think, Matt?
Yeah, I'm questioning whether that really was an impact or not. I mean, so I saw his tweets
Mhm.
and I was like, I guess I was not as surprised by that because he's been saying the same sort of thing, just maybe not as overtly for a while now. Of
Yeah,
like he's planning to vote Republican for the first time. I mean, he was saying that months ago. Um,
yeah,
so to me, like I wasn't really surprised at all that he said that. I mean, maybe there's a difference between advocating that others vote Republican in order to kind of split the powers,
yeah,
as opposed to just saying what you plan to do. That
yeah.
I guess I would just be I'm a little I'm questioning that is actually what drove the underperformance.
Mhm.
we have heard kind of reports that Schwab raised the margin requirements on Tesla, and so you could have some margin calls right now. I'm sure some other
Mhm.
brokerages have probably done that. And so people who are overextended, could be forced to sell at lows, which can obviously create kind of cascading effects. So I don't know. I mean, it's very easy to kind of create these narratives that Elon's going off the deep end, or just getting involved in stuff that he shouldn't be, and like ongoing Twitter distraction, yada yada. The list of things that Elon has done that is not PC is very long, and so you can certainly
Yeah.
point to those and say, okay, investors are losing confidence, or institutional investors don't want to be associated with the stock, and so they're selling. I'm just not sure if that's really the case. I mean, to me, there could be other market dynamics at work here that might more easily explain it. But
Yeah.
I do agree with you. Like, it certainly creates more uncertainty at a time when the stock's already low and it's getting kicked while it's down.
Yeah.
So
Yeah, I mean, the stock was like 235 like literally a week ago, and now it got down to 185 this morning. I'm like, oh my gosh, like, or 186 something, so it's like $50 difference in a week. I'm just looking at the monthly chart. That's huge, a huge drop. It's
yeah, I
disappointing for
mean,
sure. I mean, Nasdaq
September
didn't drop that much in a week. I mean,
September
it's
20th, which is like a month and a half ago, the stock was at 309. So
oh my
like,
gosh,
it's kind of crazy how quickly it has just completely fallen apart. But I would argue not on the basis of any fundamentals. Like the
not
Q3 numbers
fundamentals. Yeah,
were
just
like a
perception.
mixed bag, like we said, but like reasonably okay. Um,
Yeah,
and so it's just I think it's really overdone right now, and so it wouldn't surprise me if we move back the other way just as quickly. Although I wouldn't kind of trade on that, trying to
no,
like hope for some V-shaped recovery. But I do
yeah.
think the fundamentals are good, and it's certainly possible that we could have a month or two that looks like the opposite of what we just saw.
Yeah. I mean, it's got to be so painful. I mean, we're trading below the S&P 500 inclusion price. We're getting close to the price of where the S&P inclusion announcement happened. We're getting close to that price. We're not there yet, but it's just in the last 2 years, if you bought Tesla, you're probably underwater now, and so there's so many new people that got introduced to Tesla as an investment in the last 2 years. What do you think? It's probably gone up like a number of retail investors in particular, just from looking at the Twitterverse. I feel like there's at least twice as many people investing in Tesla or bullish talking about Tesla versus more than 2 years ago, right? I mean, it just seems like the audience has grown tremendously. So it just seems like there's a lot of people in pain right now with Tesla, and so maybe that also contributes to the breakdown here because as more people are not up, as more people are breaking even and going under, they're like, let me close out Tesla. People that are bought in the last 2 years that are just disappointed now.
Yeah, yeah. I mean, either if you kind of saw the huge 15x run up or whatever in 2020 and into 21, and you kind of invested then and did really well at the end of 2021. Maybe you don't have the confidence that longer term holders, and you're certainly a lot longer term than I am. But yeah,
Yeah,
it could be shaking out some weak hands. I think that's certainly a
yeah,
kind of fair assessment. Or
yeah,
people might just want to diversify. I mean, there were the kind of mantra on Twitter a long time ago was just like everything in Tesla and nothing else. And um, I think a lot of people are, seeing the downside of that, in this current market. So I
yeah.
think there's a lot of reasons
Yeah.
why
But like you said,
people
the
could be selling.
fundamentals, I mean, what at $185 a share, $186 a share, what's the forward PE on that? It's got to be something ridiculous at this point, right? I mean, like,
Well, it depends on like what the which number you use. So like the market, I forget the exact number, but the market was assuming like 650 or something like that. So if you do
mhm,
like right now it's at 195. So let's just go 195 over 650, assuming that's what the market is. So that's a forward PE of 30,
oh my gosh.
which is kind of like hilarious because you'd imagine if they deliver that $6, it's possible the PE ratio could compress further or just not move up. Um,
Yeah.
but like if they're actually increasing their earnings growth by that much, and like have the kind of operating leverage that we think they could have, um, it would be kind of silly for the PE to be 30 this time a year from now.
Yeah.
And at the same time, I think like the 650 figure that we use there is probably really low. We went
Yeah.
back through our own model pretty recently and did like let's try to do a very conservative case, like bring down all of our assumptions, to levels where we think it's more likely than not that Tesla would beat these figures. And I think we came up with something, I forget the exact figure, but it was north of like 725, something like that,
Yeah.
$7.25. So with a more reasonable figure, maybe being
And
north
these
of
are all
eight or
assuming
$9.
like no meaningful FSD uptake rates, right?
Yeah,
And this is all assuming that like call option is worth nothing more than it
worth
is now,
nothing.
or worth
Yeah.
nothing.
And energy is worth nothing, which is probably worth talking about too, with like the
Yeah.
Lathrop factory. I mean, that seems like the dark horse in Tesla's fundamentals, which is like very, very close to ramping up.
Yeah.
Um, Maybe I could just share a little quick
Yeah.
math
Share a
on
little bit
that, because I've
more.
been
Yeah.
like, there's a couple people like Mad Manx has been kind of talking about this a lot lately. We had him on the Tesla Energy roundtable that we had a while ago. Bradford Ferguson talked about this too. But like the Lathrop factory, which Tesla's ramping up right now, they just released a video a couple weeks ago talking about their hiring for that, and they're trying to ramp up. But it's a 40 gigawatt hour factory devoted exclusively to megapacks. And 40 gigawatt hours is bigger than the original gigafactory in Nevada. So
And remind us what the mega packs are for the people that aren't
yeah. So
totally clear.
the mega packs are like the largest stationary storage pack that Tesla offers. So like for large scale utilities and that sort of thing, they're really scalable. They've got a huge backlog, a multi-year
What do they sell
backlog.
for? They sell for like six
So
figures or million plus, or I don't know. There's
I forget
figures plus.
the exact specifications, because I tend to look at it on like a dollar per kilowatt hour basis, and by
Yeah.
that math, it's something like $400 or $500 per kilowatt hour. Kind of depends on which configuration you choose. But yeah, I mean, for the most part, you're talking about multi-million-dollar installations
Yes.
of these mega
Big one.
packs to large scale kind of utility customers. And there's always been like a multi-year backlog, and they were cell constrained, like Martin Vieca was talking about. So they've just never, they've never really devoted time to satisfy this this part of the business. But it really could have a very material impact very soon. So couple numbers. So at 40 gigawatt hours at the average price, that's revenue of about $27 billion per year. And that could be happening very soon, because like the plan is ramping right now. And so for reference, like in Q3, which was record deliveries or installations of their mega packs, they had just over 2 gigawatt hours. So you'd be talking about like a 5x increase in quarterly installations above the highest level that they've ever seen. And just for another idea of scale on the revenue side, so Q3 total revenue for Tesla, automotive and energy and services, everything, was $21 billion, and of which energy was just over $1 billion. So you're talking about $27 billion annual opportunity. It's like it's just an absolutely massive increase in scale. And if we know anything about Tesla's operational efficiencies, when they really ramp up production, that's when the margins come in. So energy margins have been like 5 to 10% historically, and so if they can actually have the types of efficiencies now that they've got a dedicated this Lathrop facility, it's entirely possible that they could have 25-30% gross margins, especially if you consider the tax benefits that are in the Inflation Reduction Act, where there's this 30% investment tax credit that customers get. So that'll give Tesla a lot of pricing power on these mega packs.
There's a lot to talk about with the Inflation Reduction Act that we barely scraped the edges of with our energy roundtable discussion a couple weeks ago with Mad Manx and the other guy and Duncan. We're going to have a follow up with them in January, February, or March to go over more details about how the Inflation Reduction Act is really making huge, creating huge benefits for Tesla's revenues and profits and the consumers of these things. So. Yeah, I mean, Brian from Next Big Future says it's 3.9 megawatt hours per mega pack, so it's about a 1.6 to 1.9 million dollar cost per mega pack. That seems about right. So obviously these bigger installations are lots of mega packs usually combined. I remember the original one was the original big one that I think made everyone's eyes kind of wow. I don't know if you probably remember is the Australia battery thing that he like
Yeah.
Elon tweeted back to some Australian billionaire. Yeah, we'll do this in under 100 days or whatever the timeline they did it or something. There was some yeah, that was kind of the original eye-opening, I feel like, to me of what these mega packs can do. And I don't think they were called mega packs back then, but it was like the first giant battery they built.
Yeah, yeah, it was, and I think the economics of that particular installation, Hornsdale was the name of it.
Yep.
Thanks, Boil Down Age. Um, like the economics of that one were incredibly strong. But I've been like saying for years that's not a replicable project because they had a very serious frequency,
Mm,
regulation issue in that part of the Australian grid,
mm,
and that's not like there just is not a market to pay, Tesla or anyone for voltage regulation at anything close to the rates that Hornsdale project was paid in South Australia. So the
yeah.
economics are not going to be like that. I think it was something like a 8-month payback for the owners or something. It was just something absolutely absurd. And so like it's not going to be that sort of thing. I don't think you're going to have like 80% gross margins and like
Yeah.
anything crazy like that.
Yeah.
But going from 5xing your energy revenue and doing so at margins that go from 10 to 25, 30% is a very real possibility that I'm almost certain no Wall Street analysts are kind of baking in. And so I think this
Yeah.
could be
It's like
a pretty meaningful surprise in the upside for the next couple of years.
yeah, and Brian just corrected it's about 2.4 million per mega pack. They raised prices. So but so this is like an example of one of the call options within the business, like FSD beta, but this is like a call option within the business that's meaningful, that is very likely to be coming to fruition. I mean, it's slowly coming to fruition, but it's very likely to keep increasing as a very meaningful
Yeah.
impact of the bottom line in the coming quarters. And it's
Yeah.
something we can clearly see progress on, quarter over quarter, versus trying to guess the FSD uptake
Yeah.
rates.
Yeah, I mean, to me, it seems less like a call option, and more like so in Q3 of 2019, when Tesla first turned the corner of
Mhm.
profitability. Remember at that time, everybody expected that their gross margins would just kind of compress back down to where they had been historically, and that their
Yeah,
OpEx would just continue to increase, at
yeah,
very high rates. I remember thinking that just doesn't make sense because they were cutting their overhead at the time, and if they were selling more cars in the future, why would gross margin go down? Let alone
yeah,
operating margin. So I was like, that just doesn't
uh,
make sense. So to me, it seems like a similar sort of thing where, like, very clearly, the energy revenues are going to increase, and it seems very likely that as you scale that the margins will increase pretty substantially as well. So and I
yeah,
meant like. How much better are the margins going to be at the Lathrop factory compared to however they've been cobbling these together, out of Giga Nevada now?
yeah.
They've had a lot of time to figure out what's the best way to design this factory, and I would have to believe that the margin potential is pretty substantial.
Yeah, absolutely. So this just, I think the business versus the stock is so hard to separate. And we're talking about the business. That's all most of us, content providers, YouTubers, that I think that's where you get the quality information, like the signal versus the noise is the people that can analyze the business and talk about the business of Tesla. I mean, trying to read tea leaves of technical analysis charts and predict the actual stock price, it's so noisy and random and it's it's impossible. People that do that successfully become wealthy enough to not have to be content providers, in my opinion. So I think I think the stock is a separate. It's affiliate. It's related, but it's very different from the business. In the end, in a long term horizon, 10 years or whatever, you know that the fundamentals of the business will justify whatever the stock price is going to become eventually. There'll be share buybacks, dividends, whatever PE values given to it by the market. But in any 3 to 5 year period, especially when the Fed is moving valuations all over the place with interest rates, it's very messy and it can feel random or just it can feel nonsensical and irrational, and that's sort of where we're at right now, with a lot of stocks, especially Tesla. And then you throw in the Elon factor of him, being the biggest living person in history right now and getting every possible negative news article written about him, drawing attention to Twitter and all this stuff. And people, just hating on him, half the country hating on him for everything he does. So you draw that into the equation. It's even more volatility in Tesla stock that we're seeing right now. But if you're a long-term stockholder and you're not trying to trade short-term, then it doesn't rattle me for my long-term Tesla holdings, my personal long-term Tesla stock. For our fund, it's very rattling, because it's much more short-term oriented and it's
Yeah,
rough,
it's true.
so, but if you're disciplined enough to have a large amount of stock that you're just going to hold long term and not be on margin, not try to buy call options, if you can stay disciplined, in my experience, to have that kind of core position, I feel like the more you study and listen to content about the business of Tesla, the more at ease, the more I can sleep at night with those core holdings, versus getting nervous even on that. There's no reason for me to be nervous on my core holdings of Tesla, if that makes sense, even though the
Yeah.
stock has been capitulating ridiculously low, getting lower and lower. And even if the stock continues to capitulate down, I'll be, I'm not going to have FOMO that I should have sold now and bought back at $150 or something. I just don't know. It could start going back up now. So, I just wanted to make sure people can separate the business from the stock, because it can be separated for a year. It cannot be correlated for years. I saw from 2014 to 2019, it felt very uncorrelated and frustrating and, very disheartening. But I continued to study as much as possible on Tesla Motor Club forums and, Rob Maurer's incredible daily podcast and a couple others that were back then, going on for a while, Dave Lee. And so the more I was able to continue studying and talking to, other people who study the business, the more comfort I felt in keeping that stock position, the core stock position I had, especially, so that's all I wanted to say about that. It's very stressful, I know, for everyone here, probably, who's a big Tesla. I'm sure 90% of people listening are invested in Tesla and experiencing the same kind of stress that, everyone, we're all in this together, and it's just tough. I feel like I'm a Bitcoin, like I see this on Bitcoin crypto too. The difference between Bitcoin and crypto is there's no fundamental
Yeah.
earnings. There's no fundamentals to it. It's just a speculative, hoarding and speculation, like it may come to fruition, but there's no like actual value of like dividends or share buybacks or
Yeah.
anything. It's just much more
You
speculative.
you're banking on increased adoption driving the price going forward,
Yeah.
which
Yeah.
there's a reasonable case to be made that could happen, but
With
there,
Tesla,
there
we're
is
banking
no
on the business and the
fundamentals. Yeah,
product. Yeah, with
for
Tesla, we're
sure.
banking on the business and the product, and that's what we can
Yeah.
actually test, and we can tangibly put our hands on and experience. Bitcoin, you just talk to all your friends and see who's adopting it, who's not. I guess that's how you can test it. I don't know.
Yeah. Yeah,
Yeah.
for sure.
So, all right. Well, we've talked a lot about that stuff. We got a lot more stuff to talk about. I mean, earnings this week is a big week for our other stocks that we follow. Rocket Lab is later today, I think, and then Lemonade and Roblox are tomorrow, I think, both of them. So, yeah,
I think Rocket
there's
Lab's
earnings.
tomorrow, actually.
Oh, okay.
Maybe it's Roblox today, but yeah, those three companies in the next 2 days. So we'll be busy digesting those and unpacking them for sure. And then,
Yeah.
yeah, there's the Lemonade Investor Day next week in New York too.
Yeah, you and I are going to be there in New York City. We're both there for like less than 24 hours, I think, or about 24 hours. So, not long for either of us, but enough to, meet other investors at the investor day in Lemonade, and, get to see Shai and Daniel Shriver in person. And it'll be a good experience. I still am a believer in Lemonade. I'm very curious to see what this earnings shows. And Paper Bag Investor, if you don't follow him and you're a Lemonade investor, he's great. He put out another killer video on some new metrics that he's coming up with about Lemonade. So we'll see how the Lemonade narrative or how it plays out, if they can actually turn a corner and with car insurance and such. And so, yeah, Roblox, they're all good things. But let's, anything else you wanted to chat about, or should we just kind of go to Q&A?
Yeah, no, we I think we went on some topics a little bit longer than we meant to, but let's open it
Yeah,
up
we
for
did.
some Q&A.
Okay. All right, let's open up to Q&A. First question from Tesla SpaceX fan on Twitter. Do you expect Tesla to hit 50% delivery growth over each of the next 4 quarters? 50% delivery growth? I'm not sure if 50% delivery growth over each of the next 4 quarters. I mean, this quarter, that would have to be, what was it, 360,000 or 340,000 last quarter, I think, or something like that, right? It was like, so that would be,
Yeah.
yeah, it's not going to be 50% growth
I
now.
took that question to mean like this
Year over
quarter
year.
over year over year. Yeah.
Oh yeah, yeah, yeah. Year over year, I think that's should be in the bag unless the recession in China is much worse than we think, which we already think it's significant. But if it becomes much worse, that could be a problem. That's a big risk I see as China's economy, which I'm not sure anyone that I know seems to fully grasp how bad it could be right now.
Yeah.
But yeah, I mean, I think it should. What do you think, man? You think 50% year over year? I mean, the Inflation Reduction Act is going to make demand in the U.S. you would think ridiculously high, but what do you think?
I'm very confident that Q2 of 23 will be 50% over Q2 of 22. But
Yeah,
as for the other ones, like I mean, I think the long term, roughly 50%. I think that's still intact, especially with
yeah,
Berlin and Austin ramping. I know those have had a little bit more trouble than we were probably expecting, but I think it's looking pretty good for that 50% figure in the short term, the next 4 quarters. So yeah, I
yeah.
think that's about right. Um,
And then Cybertruck should be getting produced after those next 4 quarters. So, yeah, I mean, and that's not gonna cannibalize the current, like, unlike Model Y, which is Model 3, which cannibalized Model S to a little bit, and then Model Y, which cannibalized both Model 3 and Model X a little bit. I think the Cybertruck will not cannibalize any of the existing, demand for the other products. What do you think?
Yeah, I don't think so. I mean, I think there's the whole transition, and Martin Viecha retweeted recently JPR 007, his chart of like the ice wave, where
Mhm,
essentially there's this potential transition. And this is a little speculative, but to me it makes sense that as more people realize that they want their next car to be an ICE car, or sorry, an EV, then like demand for ICE vehicles is probably going to drop off a cliff,
mhm,
but there's not going to be enough supply of EVs out there to satisfy all that like drop off of demand. So
mhm.
that bodes well for companies who can ramp well, and avoids cannibalization, like you were talking about, gives Tesla a lot of pricing power if it comes to pass in that way. So to
Yeah,
me, I think that makes a lot of sense. It may not be as clean as that chart kind of makes it out to be, but I think the general trend, a lot of people I'm talking to just say, yeah, they want their next car to be an EV, but they don't know like either how to afford one, or there's just a variety of reasons why they're not doing it yet. But I think that trend is not going away no matter what happens with the macro economy.
yeah. And one other thing I forgot we didn't talk about is the Binance buying FTX, right? That's a big news in the Bitcoin crypto universe. I mean, is Binance buying FTX the exchange or just FTX.com? I was listening to some news reporter talking about how they're different things, and Binance is buying FTX.com, but not the actual exchange or something. So
Oh, I hadn't
I'm
even
not
heard that
clear.
actually.
Yeah, I'm
I
not.
guess
You haven't heard?
Sam Bankman-Fried is making out like a bandit this year. He's doing really well.
No, no, he's buying because they're in a liquidity crunch. They're buying because
Oh,
they're like
interesting. Okay.
there's all kinds of I think there's like, it's just another reason to not have trust in crypto. You don't have regulator. It seems like there's been some people are afraid that that some of these big exchanges could go down more and more. You see these things happen. It's a little worrying. It doesn't sow trust in the whole crypto you know uh uh ecosystem, to say the least. So
Yeah,
um
it's like the Wild West. It's
it is. Yeah, yeah. So anyway, let's so someone Breakfast Pizza says FTX the exchange, they basically printed money and exchanged it with Alameda, which is Sam Bankman's hedge fund, and the balance sheet leaked online. The guy from Binance dumped on them, and there was a bank run on the FTX like token or something. Major scam. Oh man. So I don't know. I mean, we'll find out more info in the next day or two when we'll read. Everyone will digest more information about it. Right now, it's just kind of a fast moving story that's just kind of come out in the last hour or two. All right, next question from Cyril JBNN on Twitter. Will Twitter be successful in offering video content and be a direct threat to YouTube's existing business model? Absolutely. I think for sure. I think this is near the top of the priority list for Elon. It seems so obvious. He's already commented it on Twitter. I think they're just working out all the infrastructure requirements and the coding and all that. I think we'll see something there in the next few months. Meaningful push towards that. What do you think, Matt?
The really surprising thing, we don't monetize this channel. We want it to just be for information purposes, not trying to make any sort of return on it. So we don't really pay too much attention to content creation on YouTube and like the metrics. But
Yeah.
the surprising thing somebody said in response to one of Elon's tweets was that Google or YouTube lets content creators retain 55% of the value creation or of the
Yeah.
monetization. And I'm like, wait, that means they're taking 45% of the overall revenue like from content creators? That strikes me as
That's a lot.
insanely high.
Yeah.
Like, and
Yeah.
Apple gets all sorts of crap for taking a 30% platform fee. Well, look at YouTube.
Yeah.
They're
Yeah.
50% higher than that. That's
Yeah.
crazy.
I know.
So
I
I'm
know.
like, yeah, there is plenty of room for another competitor to come in. Like YouTube is such a behemoth. I don't think they're gonna, come in and disrupt it overnight, but I think they might start slowly chipping away and getting a little market share. And if you're a
Yeah.
Marquez Brownlee, you're like some like very serious, big money making content creator, and you realize that you're getting more monetization per view or whatever from your Twitter, you might start prioritizing that platform a little bit more.
Yeah.
So yeah, I don't know. It'll be interesting to watch it play out. I'm really excited just as like an observer to see how Twitter changes over the next 12 18 months.
Yeah. And that YouTube, that 55%, that's all advertising, I think, revenue. Right? I mean, that's like the only revenue you can collect really is just advertising revenue. I think um, there's more opportunity than just advertising for the content creators. And I think about like not to bring to the Roblox business model is a little bit similar. Roblox developers or content creators collect, I think, like 30% or 35%, which seems a lot less. But Roblox, the platform, is providing, the software. It would be like YouTube providing the cameras and equipment for the
Yeah.
YouTube content providers or something, but Roblox provides all that for the Roblox developers. And then Roblox has to pay Apple, the walled garden of Apple, 30% or whatever, 20 or 30%, whatever that is. So that's why it's 35. So it's an interesting business model for content creation that seems to be a bigger part of our society going forward. How this business model kind of changes, we'll see, or evolves. And Elon, I think, will be, if there's any way to evolve it for the better, Elon, will see how he evolves it for Twitter.
Yeah.
And also, you have to keep in mind, Roblox is the very little. I think they're just turning on advertising now for a little bit for in-game immersive advertising or whatever. But I think really it's mostly people buying Robux and selling and buying things in the games. Anyway, let's go on to the next question. For Martin Muldoon, question: do you think the Republicans will overturn the Inflation Reduction Act? I was asking some people about that. Was it our energy roundtable? I forget, but I was asking some people that seem to know more, and it seems like it's not likely. It would be very hard. It would require Biden to like sign off on it or something too. What do you think, Matt?
Yeah, it's not like a presidential order. It's actual legislation that's just signed into law. So you would not only need to get it through Congress,
Yeah,
which you'd probably need the Republicans to take the Senate in order to have a shot at that. But then, as Brian from Next Big Future points out, that Biden still has veto power. So if
yeah,
a bill was passed, I don't think Biden would sign a repeal of that. It'd be like Obama signing a repeal of Obamacare. That's just like that wouldn't happen.
yeah,
So
yeah,
I think it's highly unlikely. I don't think the Republicans want to spend that political capital to fight the Inflation Reduction Act. I mean, I don't get the sense that there's a lot of very strong opposition to it, to be honest with you.
yeah,
I could be wrong on that, but to me, it seems very unlikely that they would try to, and even more unlikely that they'd be successful in overturning it. I think
yeah,
if that was to happen, it would probably have to be in 2 years if you had a total Republican, House, Senate, and President. But that's even then,
yeah,
I think the odds are against that.
yeah. Next question is from T. Nelly on the YouTube comments. Read the stock price. Can Tesla Q4 financials offset the downward pressure of a hard recession? I mean, the Q4 financials, we're hoping, we think that they, we've thought the Q3 financials were going to blow us out of the water, and we were, they were good. They're better than, I think, or around expectations of Wall Street, but still good from a business perspective. But um, Q4 financials expectations are I think going to creep up to be very high, and I don't see any buy the rumor going on right now with that. Like,
Yeah, for
if
sure.
if
Yeah.
Q4 expectations are going to be high, and the stock is not, you see like a buy the rumor, a month or two ahead of that, kind of happen as people start getting their, figuring out that, hey, Q4 could be incredibly big quarter, like portfolio managers of institutions. But maybe that buy the rumor is going to start soon. But if we don't see, the stock, Tesla stock, kind of appreciating, in the next month or two, I'm not sure a Q4 financials, is gonna do much. It seems like everything is macro market driven right now. The last week or so, Tesla's kind of departed from the macro market to be even worse. And so we're trying, as we were talking about earlier, why is Tesla doing so poorly compared to Nasdaq? A lot of it, I think, is the, Elon's uh, political tweets and getting negative news headlines, and maybe a bunch of people selling that bought, previous in the last 2 years, that are underwater now, that are saying, oh, I'll just sell, I'm losing money now on my Tesla investment from 2 years ago. um, that's what I kind of suspect, but there's just, who knows why. But it's just it's hard to say if the Q4 financials, even if they're great, are going to have a positive effect on the stock. It seems like the market has to kind of settle down before that those fundamentals affect the stock price again.
Yeah, I do think though that there's a little bit of like if Tesla continues to overperform. So this question in particular was, can great Q4 financials. So I was just looking,
Mm,
the market is expecting earnings of $1.26 for Q4. And so I mean, you could imagine if Tesla, let's just say for argument's sake, they posted $1.50. So then now all of a sudden they're at a $6 run rate, going into next year where they're ramping even more factories. I mean, to me, that would force analysts to kind of revise estimates upward. And so then, if nothing changes with the stock price, then your PE is getting even further compressed from the the levels that we're talking about right now. So like PE compression can continue to happen, but I think it gets harder and harder for the stock price to stay kind of rooted if Tesla kind of continues. Beating on earnings, because that means that like the multiple gets compressed further each quarter, and at some point somebody's going to wake up and say, okay, like Tesla trading at a peg of 0.7 just doesn't make sense anymore. And so
yeah.
institutions will start buying. That's kind of my view, and that's what Gary Black has said that a lot, that as
Yeah.
analysts revise estimates, they kind of are forced to go back and recommend buying to institutions.
Yeah. I agree. I mean, I agree in that what you say there makes perfect logical sense. I just don't think the market and stocks are trading
Yeah.
logically at the moment. That's
We're
my
urging caution because it's a
yeah.
unique moment in the market
Yeah.
for sure.
Yeah. Yeah.
Yeah, and David Kasman does say Elon did say an epic Q4,
He
which
did say
yeah,
that.
I've been thinking about that a lot lately. It's so I hope he's right.
Yeah. Yeah. We'll talk more about that one of these weeks. Some of your thoughts around that. I know you have some ideas around that. We can put into the next episode or something. So from Carl Branco on YouTube Live, I understand SpaceX will eventually spin off its Starlink business. Is there a business case for Tesla to do the same with Tesla Power? I don't think so. I don't think Tesla would want to spin off, any of its like dozen or so, sub businesses. I think keeping it all under one umbrella is more efficient for capital allocation. Like, imagine if Elon had xholding.com, and like he always wanted, and Twitter, SpaceX, and Tesla and Neuralink and Boring Company were all under that, right? Well, then he wouldn't have to like sell Tesla stock to finance, Twitter, or do things here. He wouldn't have to like, and then sell, this to buy that. He could like all under one umbrella, kind of manage the capital much more efficiently. That's my thought. So I don't think he'd spin off anything out of Tesla. What do you think, man?
um, yeah, I agree with you. I think it's highly unlikely. I think the other thing to keep in mind is the mission of SpaceX and Tesla. SpaceX's mission is to, advance I forget how he says it, to like advance the light of consciousness throughout the solar system or something like that. And
Yeah.
Starlink doesn't really help with that mission. It's more of like a funding mechanism for that mission. So to me, it kind of makes sense that you'd spin that business out. But with Tesla, like the energy side of the business is completely core to their core mission of advancing sustainable transport. And furthermore, I think the bundling of energy generation and storage and energy consumption, which Tesla has with solar storage and EVs, and then hopefully in the future like things like the HVAC system,
Yeah.
all integrated together with really smart software. That is such that like that's the future of energy. I'm very much convinced of that. It's going to take a long time to get there. So having those things integrated with one company, in my mind, makes a lot of sense. And the other thing is just that there's a benefit from marketing. So one of the biggest costs for most solar installers is like marketing. So customer acquisition cost. It's a very, very substantial cost. And Tesla doesn't do that. They don't pay anything for their solar, customer acquisition cost because they've got this great brand recognition. So I think you'd actually have some value destruction if you tried to spin out the energy side of the business. So I think there's a lot of reasons they wouldn't do that.
Yeah. Yeah. I'm just looking at the market and it's down like a full 1% in the last like 15 minutes. Just pretty kind of quick drop of like a percentage point, pretty much. I wonder what's going on. Does anyone know if there's something going on in the last 10 or 15 minutes that's causing
Yeah, that's odd.
the market to crash a little bit right now? I mean, this is pretty quick. Usually, it fluctuates over the course of a day, but not in like 10 minutes like this. So curious. All right. Next question. From Zumba92, do you think Elon bit off more than he could chew with Twitter? A social platform is full of nuances, unlike physics. Thoughts? I don't think so. I think Elon knows what he's getting with buying Twitter. I think Elon's much smarter than a lot of people give him credit for. People say he's smart, but then they second guess him, right? That's like being a hypocrite almost. Like when you say, "Oh, Elon's so smart, but he did wrong there." That's like, you know, I think you have either trust him or you don't, and if you think he's super smart and like knows his stuff, then you trust him, and he's smarter than yourself. Like I know he's million times smarter than me. And I think I said on Dave's channel the other night, like I almost have this weird, order of operations with Elon where I've been following him so long. Normally in the world, when I see news reports or people I think are important people say something that, I don't, that's new to me, prediction or whatever, I kind of think like, that's interesting. Let me see if I can help verify if that's going to happen or not. And I start researching it in other ways myself to see if I agree with them or not. But with Elon, it's a little different. I've learned to benefit from realizing when Elon says something, I sort of by default believe it and think of how can I disprove it. But I think that's true until I can disprove it, So, that's how I am with Elon. And he's just sees the corners around corners in the future better than anyone that I've ever witnessed, So
Yeah.
what do you think, Matt?
Yeah, I mean, I agree with that. I do think, just we like to think of things in probabilities, and I do think it's much more probable that Twitter would be, some sort of failure instead of like I think Twitter is much more likely to fail financially than Tesla or SpaceX. But it's probably not as risky as they were back like before 2008, for example. So I don't know. I kind of think of it on a spectrum. Like there's a decent chance that his vision doesn't come to pass. But I certainly would not want to bet against him. And his vision that he's laid out makes a lot of sense to me. I know he's catching all sorts of flack for it right now. Some of it for good reason, some not, I think. But it's possible, I think, that Twitter will be some sort of kind of like middling. They might lose some customers, or they might not get enough people paying $8 a month to support their financials. And if advertising doesn't come back, it could be, it could just be a rough couple of years.
Yeah.
So I don't know. I could see it going either way, but I get the long-term vision, and I would, if I had to bet, I'd certainly place my money on Elon to be successful here.
Yeah, me too. All right, let's do one more question here. From Breakfast Pizza. Love the name. Survived on pizza and for breakfast a lot in my younger years. Uh,
Can't do it
question.
anymore.
No, can't do that anymore. Although my 10-year-old this morning had some leftover Domino's pizza this morning for breakfast. It was interesting. So, question: thoughts on Elon discussing Tesla entering into mining with Ron Barron? Yeah, it seems like he said something like it's increasingly likely. He's either saying that to try to, threaten the current suppliers and miners that he's working with to like get their butts in order and step up to the plate faster with Tesla, or they're serious. I think it's more likely he's serious and he's just being sincere or genuine and saying like, yeah, there's a good chance, it's high. He thinks probabilistically, and I think it's becoming, more almost probable at this point that they're going to have to do something there. That's just my gut feeling. What do you think, Matt?
Yeah, I agree. Like I think it's very likely that they're going to enter the mining business. I did think it was interesting because I kind of thought they would do it through acquisition. I thought they might buy one of these mining companies just to get all the equipment and the expertise and everything like that. So I was actually pretty surprised that he said, no, we're going to do it ourselves. We're not going to acquire our way
Mm,
into there. So that certainly increases the difficulty level of doing it, but they do have some experience just with the, geology just on the boring company. Now that's a whole different situation than like actual mining. So I wouldn't give them too much credit for what they've learned there. But I was a bit surprised that they wanted to do that. But they need to. I mean, they were talking a couple of, or at the battery day about how they want to be masters of their own destiny. And if they really want to do that, I think, kind of dictating the pace at which they're, expanding, mining operations that's a good way to do it.
yeah, absolutely.
So I did see in the comments too, somebody said the Coinbase site is down, Brian V. Coinbase now is down 11.5% on the day. It was at 57 just an hour ago. It's at $50 now. So I don't know what's going on with Coinbase,
Wow.
but that may be
Yeah.
causing ripples throughout the
With the
whole
FTX
broader
thing and
market.
this, I think people are losing trust in crypto, and then you have all these, growth mind investors who are invested in crypto and the stock market have to liquidate stocks as well. Yeah, to cover
These
losses in
these
Bitcoin.
correlations do kind of crack me up sometimes, though. It's like Tesla down 2% on Coinbase site outage. Like
Yeah,
it's kind of
yeah,
funny how correlated these are sometimes in ways that don't make any sense whatsoever.
yeah,
So
yeah, yeah. It is funny. I mean, it it does make you appreciate in these uncertain times for crypto invest. Like if you're a serious crypto investor right now, it's got to be a little nerve wracking, and it's got to make you appreciate in the financial market, in the stock market, that we have regulators to help put some transparency on how things are run, how stocks are held by brokers and rehypothecated or lent out, and all that stuff is very highly regulated. Whereas in crypto land, there's very little regulation, and
yeah.
so we're seeing kind of the some of the results of that. I think in some of these things, Celsius went down another month, and some other, it's just yeah, crypto is really going to suffocate with high interest rates, in my opinion. So we'll
Yeah,
see.
it's already happening, and it's interesting. We were talking about crypto earlier in the conversation too, and David Kasman again said in the comments, like, not your coins or not your keys, not your crypto. It's like a kind of mantra, and if you're using a site like Coinbase, you can't sell right now. So in the last hour or so, Bitcoin's down from over $20,000 to under 19. So if you
Yeah,
wanted to sell while this liquidation is happening, and you're on Coinbase, you can't. So
yeah,
like there certainly is some value to being in charge, like the kind of master of your own destiny, like you were saying, and actually managing your own keys. It's a lot harder to do, but it's
yeah,
the kind of centralized platforms like Coinbase are vulnerable to outages like this, and it can
yeah,
leave users stranded. So
yeah.
caution, everyone.
Caution, caution. Yeah. One last thing I wanted to mention, that one of these days we should just do like a fun little we should invite some people on and just do like a group Tesla trivia
Oh,
chat,
that'd be
like
fun.
podcast. Yeah, we could all
Lighten it up
submit
a
some
bit.
questions, lighten it up, and say like, what was the name of the first Tesla battery project in Australia? Hornsdale or whatever. Like you just have to like say who was the first, head of marketing for Tesla that created the Tesla stores experience to be similar to, just like weird things you could say. And like, I wonder how many interesting, we could just how much we study it, we come with a lot of cool little trivia questions. It'd be kind of cool, like a game show.
I like it. I think
All right.
Farzad would be a great host for that. We should
He would be a great
try to
host. Yeah,
loop
we'll
him
talk
in.
to him. Yeah, maybe we'll create like a channel just for Tesla trivia, the Tesla game show, and like I don't know, prizes could be like Dogecoin or something. I don't know. So we'll
Dogecoin,
figure
nice.
something out. Yeah, I mean Tesla's becoming so big and Elon's so big that I feel like you could create stuff like that and enough people would watch it and be interested. I would be interested if someone else created it. I'd watch it.
Yeah,
So
I'd watch it. I'd love to play it. It sounds like a good idea. Let's
yeah, yeah.
let's try to get some feet under that. I like that.
Yeah. Okay, cool. Lighten things up. All right. All right, everyone. Until next week. This is recorded on Spaces and YouTube, our YouTube channel, Good Soil Investment Management. So feel free to check us out anytime. All right.